This is Siddharth Alwalia. Welcome to the 100x Entrepreneur Podcast. This episode is brought to you by Prime Venture Partners, an early stage VC fund led by Amit Somani, Shripati Acharya, and Sanjay Swami. Prime is often the first institutional investor in category creating tech startups in fintech, SaaS, healthcare, and education, such as MoneyTap, Happy, MFine. To know more about Prime, visit primevp.in. Today, I have with me Naren Gupta, co founder and managing partner at Nexus Venture Partners. Welcome, Naren, to the podcast.
Thank you, Siddharth. Thank you for having me.
Naren, you are a legend in the venture capital world. You don't need no introduction. But, for for our listeners, I would love to know your journey, as an entrepreneur, right from the old days when you moved to US being a gold medalist in IIT, and then you came to US for your MS and PhD, and you built companies in US, taken them public, and now you are guiding entrepreneurs. Would love to know in details from your mouth itself.
Yeah, so I came to the US in a long time back, 69, and I have always been very curious. So my goal to come for coming to the US was to do masters and then ultimately PhDs, where you can really be free to discover new things and get into potentially invent things. And a lot of that requires curiosity and trying out many possibilities and then hopefully getting to some reasonable answer. So I came to Caltech and then I came to transfer to Stanford only because the area I wanted to work in was not very broad at Caltech. Both are great places. And I'm very fortunate that I got a fellowship at both places, so I didn't have to pay for my studies. And I've always sort of, I took a job after that. And then in 1980, I started this company, Integrated Systems. And I really did not know what I was doing, honestly, at that time. But what I quickly learned over the next 2 or 3 years was two things. First thing is that people want to solutions to their problems. Nobody is interested in buying technology. And what they want is a product, a high quality product that works all the time, that solves their problem and doesn't really increase the amount of work that they need to do. And second thing I learned was that even with a great product, you need to couple that with good marketing and customer support. So there were very early lessons I learned in the 80s is that uh, it is important, it is necessary to address customer needs and then fully support the customer through the journey with your product. Sale is just a transaction. The customer relationship and how you work with customer is a process, and the process is almost as important, perhaps more important than the transaction. And I started the company really to have it last a lifetime. I had no intention of really selling the company or taking it public and so on. But you stay adaptive. And in 1989, 1990, it became clear that going public was very valuable for us because of cheap access to capital, lot of access to capital at a reasonable price. So we went public in 1990, and I stayed on as CEO till 1995. And basically, at 1995, I was one of the very early entrepreneurs, certainly one of the earliest entrepreneurs of Indian descent. I think I was the first Indian CEO to take a company public in the tech space in the US. And a lot of people started approaching me at that time to say, hey, can you answer our question? We want to start a company, or we have already started a company. So my introduction to venture capital or investments was really accidental, I would call it. I really had no plans to do it, but the opportunity seemed good, so I would meet lots of entrepreneurs every year, maybe 100 plus, and then sometimes once in a while I would make investments in companies. So 1995 to 2005 or so, that's what I did, and things worked out great for me. 20 some investments I made, 23 or 24. It's, three, four companies went public, and Number of companies got sold at a very good outcome. And at that time, uh, I had also made an investment in a company in India, IT Infinity, started by two young IIT Bombay graduates. And that company did very well. They were a product company. I pushed them to be a product company and one of the earliest product companies. And then about 5, 6 years, 4, 5 years, 5, 6 years later, they got acquired. They had an acquisition offer. And I told those guys that, look, you shouldn't sell the company. You're growing 100% a year and you're profitable and everything else. But their view was that if they sell the company, they get enough money to really um, live a life of their own, nothing to worry about anymore. And what happens was that I came to the realization that if we had real venture funds in India, what I would have done is to find a partial exit for these founders so they could go on and build a big company. Of course, I don't have that luxury. So that's why I got interested in venture in India. In 2005, 2006, I made a number of trips to India, met hundreds of companies, essentially to talk with them, what their challenges were, what their opportunities were, and so on. And there I met Sandeep Singhal and Subir Sujan. And somewhere in the 2006 timeframe, we decided uh, to say, hey, it's an opportunity very early to launch a venture fund in India. And basically, so that the two things that I'm very proud of in our launch was we we basically met companies together and we had a meeting of minds, the three of us, on what we will do. But even second thing, most importantly, a meeting of the minds on what we will not do. I would say even for startups, the key thing in life is to understand what you should not be doing. And we said we will not invest in cross-border services company. We want to invest in real estate. We want to, those days, invest in manufacturing. There are about 20 areas we came up with where we will not invest for a variety of reasons. Could be regulations, could be opportunities was in the past, not in the future. And basically, so we said, hey, we will create a product culture in India. We'll fund product companies in India as well as Indian consumer services plays that are driven primarily by technology. And that's sort of how we came into being.
That's a wonderful journey, Naren, which I think very few entrepreneurs are able to realize on both the sides. And Nexus is one of the most reputable names in India, especially I think if anyone wants to start an enterprise company in India, Nexus is you have built such a great brand that Nexus is the first one they approach.
I hope so. And I hope we provide them value, that justifies their reason of approaching us first.
So how did you build this brand for enterprise targeting? Companies which are targeting enterprise are in software product space. Uh, what was
So,
was the thesis?
yeah, I think that way you have to think about technology in general and enterprise technology in particular is that the technology really does not follow any political boundaries. iPhone works in India just as well as it works in the US. It's not so much social norms as ease of use and capabilities and dependability that drive technology. So, what we were able to do early on was bring US norms, US approach to building companies, US our understanding of technology market in the West, and mix that with the Indian talent and Indian's capability to get things done. Indians are very good, very entrepreneurial at getting things done. And I think it's that marriage of the two and sticking to it over time that I would say helps us provide the right guidance and right value to startups. Now, I mean, we funded DimDim well, one of our earliest funding companies we funded was DimDim about 3 months after the fund was founded, within 3 months. And it was a precursor to Zoom. And the same thing happened with ZimDim also, by the way. They had great technology, but ultimately the founders wanted to sell the company because they could be kind of well settled in their personal lives. Not ideal, but I think it worked out great for them and great for us. So I think you have to look at technology from a very global perspective. You cannot say I'm building the best video conferencing company for India or in India, because big best video conferencing company in India needs to be the best global video conferencing company. So I think China is a bit different, but China also has had the problem of not creating any globally competitive tech companies. Of course, they've created large consumer companies, but in a protected market. So I think our view was that we need to hold every enterprise company coming out of India to global standards. And I think we pushed for that, and I think we did a very good job. Uh, and it's not that we are holding the entrepreneur's feet to the fire, we are also holding our feet to the fire and saying we need to provide value. We need to provide guidance. We need to provide honest guidance, even if it is contrary in the short term to Nexus interests. Um, so the companies can be globally competitive and the companies can be long lasting.
Naren, but you started really early on when this enterprise uh, product companies didn't even, the wave didn't even started in India, right? Today we see that, but in
Right,
2006, 2007, there was not. Indians were always known for their tech talent,
right,
primarily because of the hard work they put in and the amount of emphasis on education uh,
right.
there is in India. But they were never good global CEOs or global marketing or sales VPs in India. How did you build that kind of talent in your companies?
Well, I think a lot of the marketing comes from exposure. I think that Indians are smart, and the reason they did not have marketing talent were two things. They were not exposed to global consumers, because consumers help you define what the product needs to be, and they were not exposed to global marketing practices. So it's two different things. You didn't have the customers to talk with, and you didn't have professionals in the marketing space to talk with. And I think we made those connections possible. We would invite those our companies and just hang around the valley. I mean, people would say, "Well, I need to have 5 appointments in a day." No, just go and meet some people, your friend at Google, and ask them questions and ask them to connect you to other people. So I think that's kind of where it started. Starting these things is hard, I would say that, but Indians are very entrepreneurial. I mean, they feel at home, and even if they have never been to the U.S., in Silicon Valley after about a week, as if they really belong here. Other thing I think I would say is that it is a point in time in the U.S. where people of Indian origin were getting high level roles in tech companies. If you go back 20 years, there really were not many even VP candidates roles in tech companies, people of Indian descent. So I think we will also leverage those people to say, hey, you need to help our companies based in India, because what happens in India impacts, over a billion people, or could impact over a billion people. So I think we kind of leverage all our resources. And and again, this is a process. It didn't happen overnight. I mean, we hope we are getting better every day. Uh, it was pretty hard early on. I think when uh, we also took the view that companies need to be product first. You've got to have a high quality product. Just marketing a bad product, you know, is not going to get you very far. It will bring you some customers, absolutely, but it won't get you very far. So I think that's also helped us in bringing that kind of a culture in enterprise startups.
And then I think it was over a period of time that you uh, built a cross-border team. You,
Yes.
Jishnu, and Abhishek in US, and Sandeep, Suvir, uh, Samir, and the rest of the team in India.
Yep.
Both the perspectives of uh, consumers and markets sitting across two very different countries.
Running two offices or multiple offices, we have three, for a venture fund is always hard unless you have a very high level of trust, because you build trust by not by meet through meetings, but by water cooler talk, so to speak, random discussions. And we have spent enough time on that. We have a very high level of trust among our team members. So we don't have to ask Samir, Samir say, I think this is a good approach and this is the reason. We don't have to ask him kind of more details or question his judgment and decisions. I mean, of course, we question the markets and stuff like that and say, hey, in the US, we have seen this and so on. But so I think that is what has helped us do that. I think Excel and Sequoia have advantages. To do enterprise technology in India, you're going to need a very powerful US presence. And it has taken us a while. I mean, Vishnu joined us 12 years ago, and Abhishek joined us more recently, 5 years ago. So we have a very steady kind of a sort of a value system culture within Nexus to grow people from within. And one would argue not just in an Indian VC firm, but global firms. Next, Jishnu is certainly one of the best enterprise investors anywhere. If you look at the kind of companies he's working with, Postman, H2O, Rancher, you just name it, Headspin. So I think Drew is in the board of Drew as well. So I think that's kind of just takes time to do that. I think they might be thinking of it.
That's a very unique perspective, Naren, and it took you time to build that over a period of time. And congratulations, we are seeing the results now. Three of your enterprise companies have turned, $1 billion in valuation this year, and all are based on the basis of their revenue, not
Yeah,
on the rounds of financing.
that's right. All are really solid companies generating revenue. Postman is already profitable, and Druva is very large in size. Triple-digit revenue, growing strongly, very strong customer base, very low, churn. People love the product. You know, so absolutely. And you will see many more in the next 12 months. Number of companies coming along, very strongly, in our portfolio.
Hasura is one of the three, and H2 is another one of them, which is in the pipelines.
Yes,
Already.
it's very large in size. Rancher, and I think you probably saw that. You might have seen that it got acquired last week. We announced that acquisition this week, and I mean between 500 million to $1 billion valuation. Certainly, I would say we wish they were not acquired right now because I think we
Yeah.
can build even a bigger company. But those entrepreneurs are exceptional, and we are so happy. We are so happy for we of course a massive return for us, but also an incredible outcome for the founders. So I think we are happy from that front. But certainly, we want to build large companies, and observe. We funded a year and a half back. I mean, he's just a very unique person. So I think, in many ways, we are attracted to these unique, extraordinary leaders, and 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 to a certain extent, they are attracted to us as well. So I think that's really been a kind of a. Now, I mean, the other thing I would sort of say that perhaps you would not be surprised about is that we are very proud to say that when entrepreneurs who have had positive exits start next company, in every case they come to us first and say, hey, we would like you to fund my company because my past experience was so positive. And it's a kind of a that symbiotic relationship we have with the entrepreneurs that makes us who we are. So we have a lot of good things going, but I would say no shortage of challenges either.
Yes. And the third company which went $1 billion.
On one hand, as you said, our companies are the valuation is based on revenue, not something else. But honestly, we don't actually focus on revenue. Revenue is a result of everything we do. We focus on creating good products and that can serve large markets and building great teams, and the revenue happens. And sometimes the growth is not a straight line either, because you kind of reach a plateau and then you kind of rejigger your products and you kind of go from there. The venture capitalists need to understand that growth is not going to be a straight line. You need to really fully evaluate. You got to come to a recognition that the product is sort of getting long in the tooth, so to speak, and that a rejiggering of the product is needed. That might take 6 months or a year, and the growth might be slow over that period of time. But that's okay. It's better to get the product right than to go sell a product that really is not, in tune with the times. And I think a lot of venture capitalists don't really understand that. They're very financially top-down driven. We are very bottoms-up driven, and we have seen a number of times where the growth came to a halt, and then we, fixed what we needed to be fixed and started growing 100%, again. So you need that sort of a maturity as well.
And you're very unique, also in how you invest. You come in very early, and let's say with a early check, and then try to back companies throughout their series A, series B round, even lead those rounds,
Yep.
where, right? So I believe the Nexus, although in most of your company you would own 20-25% by the time the later series D, series E rounds, but you also deploy a lot of capital, like with conviction in every round. You don't wait for for your entrepreneur to say go find a lead and we'll do pro rata.
Yeah, I think it's absolutely right. That's a absolute. And maybe I kind of make 2 points about it. First of all, we are very protective of entrepreneurs' time. And oftentimes we feel we are at a critical point in the company, and going out in the market and spending time raising funding, which is time consuming, and it should be. People are putting their hard earned money behind you, is not a good use of time. And we often go out and say, hey, look, I mean, here is our offer. It's reasonable, probably not the highest, certainly not the lowest, certainly not buying. We are not buying anything for cheap. And you may want to consider, taking our offer. Advantage of our doing an internal round is we don't obviously we have decent ownership, so we don't have to worry about a minimum check size or anything like that, or minimum ownership size. So the company wants to raise $5 million, they're doing $4 or $5 million in revenue. It's just easy for them to raise from internals because there are really no constraints except the valuation. So I think we kind of do that. We do that oftentimes. But the way we tell entrepreneurs is that they need to do their job, and the money will be there, and we will do our job. We are not going to continue to fund companies that either don't have the right product or can't come up with the right product. So I think all of us need to do our part, and they need to do their part. We need to do our part, and when that sort of kind of a when that resonates, wonders happen. We don't want them to worry about, hey, even if I do a good job, what will happen to funding, or what will happen to next year? Will they try to take advantage of me or whatever? So I think that again, the trust we have with our entrepreneurs is probably better than most funds. I mean, we really act like a team, not on opposite side of the table. Of course, we hold people's feet to the fire. We need to get the product done right and stuff like that. But it is largely to their benefit. Second thing I would say also is that the key to success in venture funds is to not throw good money after bad. I mean, if things are not working, we just need to call it a day. And it's not a reflection on the entrepreneur. It's just a reflection on how things are going, and maybe start all over again. Same team, maybe, or same company even. I think, and on the other hand, also double down on our successes. That's a pretty important part of the venture capital. Don't keep feeding your weaklings. You have to fix the weaklings before you feed them. But try to leverage your successes into even bigger successes.
So we have even those examples, where companies like Bolo, which were in consumer space, which was not working out, and you were very public about it. You put money in Newton School, the next venture of the founder.
Yeah, yeah, absolutely, absolutely. I mean, because they are great founders. They are great people. And I think they did build a good product. But I think our thesis and their thesis about how that will play in the market, we didn't realize some of the potential issues. We are super excited about Newton Schools. I mean, it's really could be a game changing company, and run by exceptional group of people. So why not? At least the same company that's basically changed the name. So, but being pivoting at the right time, not too early, because everything has challenges, but also willing to take that extra step, is pretty important. And I think they will do very well with Newton Schools. They have pretty good traction right now. I think we talked with them. I talked with them maybe 6 weeks back or 8 weeks back, something like that.
Naren, so earlier in the podcast, you mentioned that in your meetings with, especially board meetings with entrepreneurs from your portfolio, you don't discuss about sales numbers or month on month growth. You are focused on the process. So can you share, some of those questions, or how do you run those meetings? Like,
Well, I think in a very early stage, very early, of course, we care about revenue and growth and so on as the company becomes larger in size. So, for example, one thing we are going to track early on is churn. People who have bought your product, what is their experience with the product? Are they, after using the product, are they dropping our product or dropping use of certain features in the product? Because that focuses your mind a lot more. We would also, for example, are big fans, even in enterprise products, of things like Net Promoter Score. Are our customers recommending their friends to use the product? And you can say that has a multiplicative effect, right? I mean, if every customer of yours recommends, five other customers, or goes and, we have had a lot of situations where one of our customers talking in some cocktail parties or whatever in some social getting, hey, I've been using this product, it's great. I mean, Postman is an example of that. We don't do any marketing, and that is to me an ultimate kind of a source of success. So rather than measuring Postman's revenue 2 years ago, which was close to zero anyway, or very small, I think looking at Net Promoter Score and things of that nature, how people are using the capabilities and what are they asking for. When customers ask you for things, it is often a sign that they care about the product. I mean, when customers are being difficult, often, well, some customers are difficult for the heck of it, but oftentimes they deeply care about the product. So don't shoo them away. You want difficult customers. That's what we tell people. Don't shoo them away. And even if you don't agree with them, you don't have to agree with them, but you have to hear them out. So I think that's the kind of a thing. I mean, early on, a company is small, whether you have a $500,000 in revenue or $1 million or even a couple of million, what is the difference? We are trying to build companies with $100 million revenue going to $1 billion in revenue. But NPS score of 80 versus 40 or 20 is a dramatic leading indicator of what might happen longer term.
so a lot of focus, as you said, in early stages is, on NPS score, on referenceability, how much customer are referring other customers, how is the churn, right? Even in
Very
enterprise.
much. Yeah. Even in enterprise area, very much, you know, how much do we have to push the product? How much of it is being adopted by the customer? How much effort are we having to put to get the customer going? Things of that nature. You know, we had a company many years ago, Gluster, and we invested in the company, and it was clear the product was not really. It was good technology, but not a good product. So we told the founders that we are okay if we stop selling the product for that. And they had maybe 20 or 30 customers, maybe $500,000, $1 million in revenue. We said, our recommendation is we stop selling the product. We don't want any more revenue, and take the next 8 or 9 months to fix the product, or however longer it takes. And one of the goals was that the customer should be able to get value out of the product in less than 4 hours. And we said less than a day, because the way the product was, it required some installation and tuning. It took 2 weeks, and people don't have 2 weeks, and they move on to something else. And then once we came back to the market, our cost of selling was lower, our momentum was higher, and we had much happier customers. So why would you not take those 8 or 9 months. And ultimately, we sold the company to Red Hat. But why would you not take this approach versus continuing to push a product that really wasn't getting, a kind of a somewhat automatic traction?
Very interesting, Naren, your take on giving entrepreneurs time and not really caring, uh, them to increase sales to X number so that the next round could happen at Y, which could give a bump in the paper valuation at which you came in.
Right. Absolutely. That's probably the worst thing, and VCs do is try to design the company for the next round of financing versus long term, 10-year success. Yes, I mean, you're ready the next round, but smart people, smart investors figure out what is the kind of company they want to invest in. So I think that's the biggest mistake venture capitalists make, in my opinion, in guiding companies is preparing them for the next round rather than longer term success.
And do the questions or the board meetings change that drastically when the company reaches a growth stage? Let's say
They
some.
do. They do. They change actually quite significantly, and there are two kind of a points at which they change. The first point happens when the company starts generating steady state revenue. And steady state revenue, I mean, is you are not getting one or two customers a quarter, you are getting 10 or 20. There is some predictability to revenue. It's not a few big deals, they come in, you can make the number. So I think what happens at that point is there is a discussion around go to market and how to really, build a stronger, organization in sales and marketing, and what features are the ones that should really be, further developed to help the marketing and sales people. So that's kind of one, I would say, a point at which the board meetings change shape. Second point where the board meetings change very dramatically is when the company has built out a full team. Because then your role as a board member becomes very different because you are really helping people rather than helping uh, define the product or the sales process. If you know what I mean. Basically, the team is there. You're helping them, maybe you're making more connections with the potential customers. Maybe you're helping them, recruit people or whatever. I mean, you're helping recruit them people all the time, but it becomes a very different kind of a kind of a board discussion. And I'm kind of trying to put them as kind of like a discrete changes, but they're kind of like in a continuum.
And Naren, you have seen a journey, mentoring companies, build company, taken it to public, you know. Uh, so what did meaningful life meant to you as a founder?
Just doing, building products that customers love. I was never really focused on, I never ever thought when I started the company in 1980 that I would ever be public or I would ever be large. I just wanted to build products that customers love and customers' life is improved. They're able to do things they could never do before. I mean, it's like a kind of a journey of discovery, I guess you can say. How do you build products that customers are going to love and it's going to change their lives? It's like just on a constant quest for finding this kind of a golden key, you can call it. Not golden because it is of value, but because it solves a mystery. It's kind of, you are working to solve a mystery, I guess is the way to put it. It's a mystery what customers really want. How you address their needs, how do you solve their problem, how do you make it life better for them? And what a joy, right? I mean, to be able to do that. So I think that maybe is what kept me going. I was never happy because I never fully understood this mysterious space.
So you were driven by curiosity on customers' problem and what could delight them.
Right, exactly. What are they looking for? What should they be looking for? How do you do things that they can't be done today? I mean, isn't that a beautiful journey to be on? Forget about, of course, we always grew and we were very profitable. I mean, somebody needs to watch the store, of course. But I had a VP of finance, CFO very early on, and it just took care of everything. So when I was running the company, I never did anything administrative. I was just, a kid in a candy store, so to speak, having fun every day, trying to figure out what's going on, talking to customers, trying to asking them questions, understanding what they are looking for, why they are looking for what they are looking for, So I mean, I would say a tremendous journey, it's quite a remarkable how things can work out
So but
so well.
you expect a founder to do the salesy role also, right? Be the chief person. Were you not that person who was pushing your product down to the customers?
Yeah, yeah, absolutely. That I would say CEO is the chief sales officer. I mean, not chief revenue officer. You had to differentiate the two a little bit because I was always talking to customers and giving them a kind of a reason to invest with us, basically buy our products. I was not really a sales, but I mean, I was not a chief revenue officer. I was not really closing deals in terms of negotiating the pricing and so on with them. In the beginning, I did that because we didn't have any salesperson. I was a salesperson, but I that was not the role I had. That was the role of the sale. But I would really be talking to customers all the time and talking about giving them a vision of why they should invest with us, why we are a partner, should be a partner of choice. And it was more than about the product. It's about our vision. It's about what we are doing today, but even more importantly, what we expect they should be expecting us to do a year from now, or 5 years from now, or 10 years from now. So yeah, absolutely. A CEO who's not, and you're selling every day anyway. You're recruiting employees. You're selling them why they should, give next 5 years of their life to your company versus, anybody else. I mean, it's a competitive world out there, right? I mean, so you're selling every day to your employees, and you want to do it in an honest, open, ethical, way that makes them and makes you feel good. We didn't promise. I'll tell you is that we have no kind of a illusions about our knowing all the answers. Far from it. Far from it. In fact, there are more things we don't know than we do know. But one thing we'll tell you is that if we say something, we absolutely truly believe that to be the case. And if we don't know, you ask us a question and we don't know the answer, we are not ashamed to say we don't know the answer. Right? I mean, that's you will know from us that when we are giving you an advice, we think we know what we are talking about. We're not giving you an advice to look good. I mean, I don't know if that makes any sense or not, but I think a lot of the people feel compelled to give answers to questions where they don't know the answer. So I think we can say, hey, I will go and find out for you. So I think to me the two things that drive Nexus and should drive every organization is the organization culture and a a environment of trust. And I think a lot of the companies, I see a lot of startups in India as well that don't have either. And I think that's the kind of company where Nexus would make a very bad partner. We don't, we can live with a bad product, but we can't live with a bad culture or environment of no trust, right? I mean,
So two themes which you consistently mentioned in the podcast regarding Nexus and the people you work with and portfolio companies is, a, a culture of high trust with each other, and second is very being extremely genuine. When you don't
yeah,
know, don't pretend to look good or be pretend to look mature as an investor, because entrepreneur expects you to know the answers.
yeah. No, it's really a pleasure to talk with you, Siddharth. I think you ask very inquisitive questions, and questions I think can be very beneficial for the startup community.
Thank you, Naren. Thank you so much. It's been my honor completely to have you on the podcast.
Yeah, I appreciate your time. So, and yeah, I hope that's we build a bigger and better India. That's probably my biggest dream right now. And I think all of us, entrepreneurs, the community, can make it happen. And I think we could not have lived a better life if we are able to even play the smallest role in making that happen.